Wall Street fights back, finding itself in positive territory at the session's close. My name's Des Woodruff here at Grok Trade, and it's Tuesday, April 19th, 2011. And for the first time ever, gang, gold tops $1,500 an ounce. Today we have crude oil at $108 per barrel, and we had strong first quarter results from companies like Johnson & Johnson, paired with data pointing to strengthening in the new home construction field. And this helped with the markets going green today. And furthermore, it helped that the dollar dropped by 0.6%. What we have here is Dow up 65 points, or up 0.5%, a little more than that on the S&P, up 0.6%. However, the Nasdaq and Russell's lagging the broad markets. That is not good. We want them leading the broad markets, but they're lagging, showing relative weakness. And the banks were in negative territory all day long. The markets are only as strong as the financials. So don't get too excited about today's rally. We didn't have the underlyings giving us the support. VIX dropped 6.7%. And like I said, gold had a big watermark that it reached today. And we have the US dollar down 0.6% and crude oil up just a fraction. Transportation index supporting the move in the Dow trend at 0.81, which is bullish territory at the close. And here's the daily S&P. We have this big symmetrical triangle. Symmetrical triangles can break out or break down. Always keep in mind that how the triangle was entered. This was entered from the low going to the high is what direction it may want to go. So a bullish pennant could also be seen here, breaking out to the upside, but you cannot be biased as an individual. If you are, that will set you up as a failure in trading. Don't be that way. You want to wear the bull hat when you're supposed to, and the bear hat when you're supposed to, and you want to be sitting on your hands when you're supposed to. And gang, this is a good time to be sitting on your hands right now because we're in consolidation. How do you know you're in consolidation? Because when you draw your trend lines, you have two trend lines converging onto each other. That gives you a pitching pattern taking place. And you have all the moving averages coming together, tightly bound like we have here. And we have price action now below all the moving averages, which are acting as resistance. If we're going to get bullish, we need to get over those moving averages, but now we're not. We have a higher low, lower high, and we stay sub-zero on the histogram on the MACD-centered oscillator. That's not overly bullish. We need to get higher than that to get bullish, to get a run going up here. But again, we need to get over those moving averages. We do have a bullish Harami reversal pattern in the making here, but we need confirmation. If I go here to the ES, this is the futures. This gives us a nice indication of what's happening on volume. Today's up move gave us more volume than yesterday's or Monday's massive down move. Do you see this? The down move happened on weak volume, but today's up move happened on bigger volume. So that gives me hope as a bull that we could crawl through those moving averages. We can get over the zero line on the MACD, and we can head back up to this resistance line or better and get a breakout. However, on this breakout, what we have to do here is, let me go back to the S&P. We always have to keep in mind that the bigger pictures are very important. One thing I want to show you that's very important, if you take this trend line on the weekly chart back here in August of 2010 all the way to March 2011, that comes up. The weekly run, today's run, pushing us back over that trend line is very important to me as a technician. That tells us we have this dragonfly doji or this hammer type formation at a trend line, at a low support line. That tells me for the week going into next week, we could actually start getting bullish because we have retraced back all this big drop that we had seen. That is a bullish move. That's something for the bulls to be thinking we have an opportunity here. But until today's action, we did not have that. And the people who are what's the word I want to use? We're just overly bullish. We're doing so in the face of tragedy. However, with today's close being so high, that gives us now technical hope, something that has some teeth to it, something that we can that will support our opinion that we might be able to head higher, especially if we can chew through those moving averages here on the daily. So that's a mouthful. Now listen. If you've taken the 101s, I want you to be seriously considering the 201s. You're not ready for the 201s. Don't even decide to take the 201s until you've been through the 101s, because it will be too much for you to handle. The 101s are simply on what trading is about. 201s is how to trade. So anyway, I just wanted to clear that up so you understood that. Take care, safe trading. We'll catch you tomorrow in the pre-market video.